Sandeep Tandon, MD and CEO of Quant, in conversation with Nikunj. Let's cut across.
Aggressive target. We believe Nifty or Bank Nifty can give you 80 to 100% return in 2 to 2.5 years perspective. That's a big call which we have made last month at somewhere at 15,800. We have released our note, and we strongly believe with the weak crude prices, energy is another theme to play, and particularly talk about IOCs of the world or BPHP, maybe including Reliance. We are equally positive.
The Bank Nifty could double in 2 to 3 years. Are you sure about that? Because it sounds like a very bullish call given the fragile state the banking sector is in. I mean, hardly any earnings or a revival is there in the PSU banking space. The argument for private banks is that they've topped out both in terms of NIMs and also in terms of the spreads.
See, Nikunj, the key challenge is most of people look at pure fundamental data, and in fact, we always believe fundamental data will come with some amount of lag effect. Okay, look at the behavior characteristic on let's talk about from August and September's low. Okay, we have a fear index which measures amount of fear which is prevailing in the Indian stock market. The quant fear index on around 15 September was a second year's high. This is the second largest spike which we have seen post Lehman crisis. Okay, and if you recollect the biggest spike around Lehman which we have seen on 3rd November, after that market has given 4x return. Okay, so from that Lehman, post Lehman, if you are talking about this is the second biggest spike, we expect at least 1x return which can come from 7,500 levels. If Nifty has to give you another 100% return which we are talking about in next 2 to 3 years perspective, then what are the leaders? Bankings are the biggest biggest weightage out there, and our behavior data point is also showcasing massive capitulation happening. So I'm talking about capitulation index which is spiked to the again second highest levels in last 15 years. Both in Nifty as well as Bank Nifty. So bank stock have capitulated. Earning seasons, if you ask me from the expectation, I think could be one of the worst quarter. Things will only start improving. And you look at the behavior data points. Bank of India comes with a bad number. Today is marginally up. Bank of Baroda was the worst number. Stock appreciated 5% after that number low, and if you talked about from the low, it's appreciated maybe more than 12-13%. So from a behavior perspective, is clearly indicating after bad numbers, stocks has moved up. It's clearly indicating something has changed. And if I look at the more or less behavior picture, the bearish sentiments index is at the upper end. Call concentration is maybe close to 23 months low, 31 months low, which clearly indicate that people are extremely bearish. Nobody wants to believe this story, and because post Modi, a lot of people have built extraordinary leverage position, and those positions are now capitulated, which is not only the positions are capitulated, even their positive view or the bullish view which are generally called, even that thought process has capitulated. Pessimism very high, and we have seen whenever behavior data points indicate something, it leads to a good trading bottom or maybe long-term bottom. So we are in that camp. Based on our behavior data, we can say with good amount of confidence that banking sector has bottomed out, and this is a classic time when nobody is willing to believe. None of the analysts will going to talk about, and this is the way data points will change. I'll give you a classic example. We spotted banking index top somewhere in May 2013. It peaked out. The euphoria index was spiked, and it bottomed out in somewhere in September 2013. There's a massive capitulation. Similarly, Bank Nifty peaked out somewhere in the beginning of February 2015. There was a massive euphoria, which was followed on a massive capitulation happening in the month of September. So we have seen right from euphoric phase to capitulative phase, which means the position which got built is completely capitulated. Market is very, very light. Fundamentally, we also believe that things have started improving, and I'm more bullish on the public sector bank, which is against the trend. We believe that in next 1 year perspective, next 6 months perspective, there's a high probability that PSU banks will outperform the private sector bank, and I'm talking about large PSU bank, maybe State Banks of India or BOBU sort of things.
So are you of the view that in next 1 year, SBI will make more money than HDFC Bank?
Answer is yes.
So what could be the return from SBI in next 1 year?
See, if I am looking at next 2 to 3 years, I'm saying conservative 2 years or 3 years and maybe aggressive 2 years, we are talking about 100% returns, okay, from the September's low, which means stock has to give more than 100% return. If I'm talking about 100% return in the index itself. So you can conclude from that itself that State Bank has a potential to give you at least 100% return in from 2 to 3 years perspective.
Let's talk about one stock which you've liked in the past and which has done extremely well. You've been bullish and you've been right on this one again, Maruti. It has emerged as the best performing Nifty stock for 2 years in a row now. What is the way forward for Maruti? Will the outperformance last?
I think outperformance will continue. See, let's break this Maruti into two components. First of all, look at the yen contribution and then we'll come to the fundamental aspect. Okay. So right from August 2012, when we take a big call on yen, which was quoting around 75, we talked about minimum target 110, 120. We are close to 123 mark. Okay, purely based on the yen calculation, if I go, I think Maruti outperformance will continue because we believe yen will keep on depreciating. Okay, if I have a 2 years perspective from 123, I think yen is heading towards 145 to 155. From if I look at pure yen calculation alone, then Maruti is heading towards 5,500 or towards 6,000. And then you also look at the fundamental piece. Our auto analyst has been extremely bullish for Maruti for quite some time. So as a house, we remain bullish both from the behavior perspective, from the currency perspective, and even from the fundamental perspective. I think Maruti will remain one of the biggest outperformer even going forward also. And this has been a trend. Some of the sector or particular stock has been outperforming, remain outperformed from a longer term perspective, because at every level people think this is expensive stock, we have book profit, and then tend to chase. This is what happened very recently also, and the way the look at Maruti is rebounded, because the right from yen from 100 to 115 level is rebounded back to 123.
What is your view on pure economy related stocks like ICICI Bank and L&T? You know, frankly, these are two stocks which have disappointed. The general echo on the D Street was that buy into ICICI Bank, it was cheap and it is a proxy to economy. Buy into L&T because economic recovery is around the corner, government spending will increase and the order book will only swell up. But frankly, things have moved the other way around for both these economy related stocks.
See, from a Larsen & Toubro perspective, given the large exposure which has in the Middle East, okay, and the slow recovery process in India, so it has been affected. I think if I look at from a behavior perspective, stick looks quite weak even from the current level. So I think it's a very high likely that Larsen & Toubro still can underperform the broader indices from a 6 to 8 months perspective. And maybe long term, obviously, this is a good proxy, will rebound. So maybe buying on dip strategies should work. But we don't have very aggressive view on Larsen & Toubro even from these levels. Coming back to ICICI Bank, yes, it has been a big underperformer in last 1 year perspective. It is one of the biggest underperformers in the banking space. You talk about the private sector. I think worst is behind for ICICI Bank also. I think ICICI Bank will consolidate before started moving up. So we are more optimistic on ICICI Bank than Larsen & Toubro, given we have more bullish on the banking. I think if you have to play India economy, I think the simple theme is to go long on the bank. That will give you best returns given the valuation levels and amount of effort right from the ministry to RBI. I think if you look at the best effort, which is as an institution, they are trying to cleanse the system. I think from January onwards, NP level will start declining. And look at this time, result, PSU Bank result, bearing one or two names, I think PSU Bank result was far better than the street expectation. I'm not looking at a YOY or quarter-on-quarter perspective. Purely from a street perspective, they were much better.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.